Good morning, everyone. Welcome to Pre-Market News and Views by In the Money Stocks. Today is Friday, November 8th, 2013. Thank you all for tuning in. Let's jump right into the charts here. We're going to start off with the usual S&P 500 E-mini futures, as usual. You'll see that the futures right now are trading higher by about a point and a quarter, point and a half. Nothing really that great in the futures market. They were up a little bit higher, but have since rolled over a little bit here. But really, for the most part, after yesterday's decimation of the markets, and yesterday was a decimation, you did have the NASDAQ composite finish down about 75 points, the S&P 500 down about 23 points. It was ugly across the board. Even the Dow, which is the People's Index, that was down about 150 points. So it was really just ugly, ugly, ugly across the board. Nasty sell-off. And again, I think that hot GDP number that we received yesterday really put the investor sentiment, hey, I got to get out of this market. QE needs to come to an end. But either way you slice it or dice it, this is what we're dealing with. This is what we're looking at. Now, last night in the overnight markets, we did have the Asian markets sell off. The Nikkei 225 index was down about 1%. The Shanghai was down 1.1%. Again, it wasn't a bloodbath there. Today in Europe, you have sell-offs really across the board. The French CAC 40 leading the charge, down 1.14%. I should say the S&P rating agency, Standard & Poor's, cut France's sovereign debt rating. So, again, that rating was cut from, I believe, AA plus down to AA. But nonetheless, it is still a rate cut and having a little bit of an effect on the markets today, at least over there. But you could just see yesterday, just with Mario Draghi cutting interest rates in the EU, tells us they're very, very concerned. And, they need to do more stimulus to keep the economy or at least keep the stock market up. Who knows about the economy, if that really even matters anymore. But that's what we're looking at right now. So there was definitely a lot of fear, and you did get that rate cut by Standard & Poor's in France, and that is affecting all of the European markets today. In Europe, you do have the German DAX down about 0.6%. France, as I said, is down about 1.2%. Italy is down about 0.3%, and Spain is down about 0.7%. The London FTSE 100 is only down about 0.5%, but remember, they're separate. They can print their own money, and they do, plenty of it. With that said, we're going to go over and take a look at a few different stocks. We'll start with TWTR, which is Twitter. Let's get the new one under the belt here. And again, Twitter had a successful IPO. Stock did trade as high as 50 yesterday. Finished out around 44.90. Today it's trading at 44.25. I would expect the same range to be traded. Down to around 44 would be the low. I think they're probably going to try to, the institutional underwriters are going to try to keep the stock buoyant around that, around $44 where the price really debuted, even though it was priced at $26. I think the institutions are going to try to keep it at least around 44. I don't think they're going to try to let it close below. But if it does, once again, it'll show you that it's a sucker's game to try to buy those IPOs, especially when they come out so highly priced. Looking at a couple of other stocks, Gap Stores making a move to the upside. Now, this stock has been beaten down really since you can make a case. It topped out in August of 2013. It's been pulling back, but a really good move today. I will have gap levels out here for this, but again, I don't really see all that much upside above this high. But I will be looking to short it if it does go a little bit higher than that, and I will have some gap levels for everybody. So if you want those gap levels for Gap, no pun intended, come over to the chat room. They'll be posted right at 9 a.m. Okay. Another one that will be in play today is Tesla. Tesla is a highly popular name. Stock has really been coming down. I have levels for Tesla as well. So this one is falling a little bit today. It's around 136. I do think it can go a little bit lower, but I will have some levels for Tesla also today. So if you want, come on over to the intraday stock trading room, chat room at 9 a.m. and they'll be posted up. Looking at a few different other things here today, we do have the Bureau of Labor Statistics non-farm payroll report that will be out any minute. So we'll flip over to that in just a moment. So we will have the non-farm payroll report. I think the payroll report, the economists are only expecting 120,000. So we'll see what that number is when it comes out and how the market reacts. We could care less if it's 120,000 or just 12. I don't care. We just want to see how the market reacts, and that'll make us that'll put us in a position to make a decision on how we want to trade it. So again, let the market react, and then we'll play off of that. All right, the job report is out right now. Job report is out at the moment. Futures are starting to fall. You can see them falling. I have no idea what the number is. It looks like non-farm payroll report up 204,000. So that is a very, very bearish number because it means quantitative easing is going to come to an end. It also tells us that with the hot GDP number yesterday, the Fed has really got their back into the corner, and they must start to cut QE. So a little bit of a surprise here. Everybody was looking for a weak number, and it looks like we got 204,000 jobs. At least that's what they're reporting. How much can we make out of it? I never know. It says the October unemployment rate is 7.3%. I'm not sure we can make much out of that either. But either way we slice it or dice it, that tells us that quantitative easing must come to an end very soon, sooner than later. So now everybody's going to look towards that December meeting. Market is selling off a little bit more. Futures are now down about 7 points on the session. So good sell-off here on the futures. You could see they're, well, maybe coming back a little bit. But again, decent little decline. This is all on the back of good news is now bad news, and that's really what it comes down to. But you would think 204,000 jobs is pretty good for the month of October. Now, a lot of that is temporary work, just probably coming from the Christmas holiday season. But nonetheless, markets with at least an initial sell, and after yesterday's GDP number, tells you the Fed is kind of in a corner now where they probably will have to start to taper, or at least you're going to get more chatter of it. Who knows if they'll really ever start to taper? We really just don't know. But either way, that is the number today. Ben Bernanke will be out a little bit later, so he will be making a speech. I believe it's at 3 o'clock at the IMF, so he'll be making a speech today. So Ben Bernanke will be speaking, and I do think you have a couple of other Fed heads that will be speaking as well. So again, they're going to try to keep this market buoyant. Normally on a Friday we look for a flat to slightly positive trading day. I think we'll probably wind up with a flat day before it's all said and done, but can't take anything for granted in this kind of environment, especially where the markets have been so inflated. Just any kind of fear steps in there, money will come out of the market, and that's kind of what we're seeing at the moment. So as before we sign off here, futures are down about 6.5 to 7 points after the job number was released, and we'll just see how this all plays out going forward. I think that's really just want to take it slow. It is a Friday. There'll be some action in the first 2 hours. After that, the volume will dry up and it'll get much slower. So with that said, everybody have a great trading day, and I will see you on the charts a little bit later. Take care, everyone.